Hi Money Magnet, good morning. Welcome to my YouTube channel. I'm gonna do some charting for you this morning. I'm going to cover the S&P 500 E-mini futures, NASDAQ. This one is crude oil's future, and I'm going to cover gold's future. So I'm going to explain to you what levels I have, how I plan on trading it. I'm going to share with you my trading plan and just explain as in depth as I can on what I'm going to do. So we're looking at futures charts right now. This is the daily chart. Each candle represents 1 day of price action. And as you can see, I have a bunch of pivot lines here. What are these pivot lines? You're probably wondering. These are my support and resistance levels. And as a price action trader, I use these pivot levels so they can help me decide if I'm going to enter calls or enter puts, or in this case, buy shares or sell shares, short or long. So if I'm longing, I'm betting to the upside, and if I'm shorting, I'm betting to the downside. And it all depends on what the price action does. My decision depends on what the price action does. So I'm going to identify my levels for you first. And right now I have a support level. The support level is when the level is below the price. And I have a support level, which is one of my fib levels, at 6140, and it is serving and acting as a support level as of right now. So usually when price is above a support level, there is a chance that the price will go hit the next target or the next resistant level, and resistant level is the level that's above the price. So based on this, we had the breakout of the 6140 level yesterday. You can see it on this candle, daily chart candle right here for yesterday. This is today's candle, and yesterday's candle, we managed to get the close above. That qualifies as a breakout. So in this scenario, when we get a breakout like this puts the higher targets in play. It gives the price a chance to go up higher if a condition can be met. And in this case, the condition is that the 6140 level holding as support. So if it can, the next levels and target I have is at 6166 and 6179. Those are my targets to the upside. So if futures can stay above 6140, then in time, today, maybe later this week, we can go and hit those higher targets. So if you're in longs, or you bought shares and you're betting to the upside, I would continue to hold my shares as long as price can stay above 6140, and I would look to take profits at one of those target levels that I have above. But that is my plan if futures decide to continue to stay bullish. But if futures decides, hey, we're going to be bearish, for me, the trigger that I need to see from a price action perspective is the support level breaking down. So if the support level fails to hold, that would tell me that those higher targets to the upside is likely not going to get hit. And if it breaks down, to me, I would interpret that as the price action saying, hey, there's a great chance we're heading down to the lower support level. So as far as the bear case scenario goes, if 6140 can fail as support, I have targets at 6112, 6084, and 6050. So when we break down on support level, which is I'm looking at 6140, I would look to short and bet to the downside, because when we break down a support level, usually there's a high odd of the price going down even lower, preferably down to one of my lower targets, 6112, 6084, and 6050. So the main thing I want you to get out of what I'm saying right now is to watch that 6140 level. That's pretty much the equilibrium level for today, at least. If price can stay above that level, then those higher targets are still in play. They're still possible to be hit, to be touched, to be tested. But if it breaks down 6140, then that's the price telling me, hey, it's not ready to go up higher just yet. So that's what price action trading is all about. You're making your decisions based on what the price action does. You're reacting to the price action, but you're not impulsively reacting. You're making informed decision. It's an informed react, if you will. So that's futures. We're gonna move on to the NASDAQ. This is the NASDAQ. I have different levels for it, obviously. 22,397 is currently my support level. 22,397. That is a fib level, and it cleared yesterday. You can see it on yesterday's daily chart candle. Now that price is above it, and if it continued to stay above it, you see I have this structure here with my red lines. This is what we call a wedge, some type of wedge. And if we can stay above 22,397, there's a great chance that NASDAQ can pop up higher and go hit that that wedge, the top of the wedge, which would take price to about 22,530-ish, above 22,500 basically. That would be a pretty nice move from 22,397 up to 22,500. And above 22,500 would be the breakout of this structure. But if it is pullback time, usually when we reach the top, when we hit a high pivot point before pulling back, the price action likes to give us a false breakout setup before it actually pushes down lower. And there's so many examples of that in the past. So as someone who trades this market, I cannot see the future, but I like to make my decisions based on the price action, but also where the odds are a little higher in my favor. So if I'm going to bet to the downside, I would need to see the price give me a false breakout setup. It's not guaranteed that I'll get the big move to the downside that I want, but it would increase the odds of me making the right decision, of me getting what I want. You understand that? So based on that idea, if 22,397 fails as support, there's a great chance that my next target to the downside would hit. I have a target at 22,300, 22,218, 22,078, and 21,980. Those targets can possibly hit, but only and only if it gets triggered by the false breakout setup, which would need 22,397 to fail as support. But if that support level does not fail, there is no reason to bet. Then there's no reason to bet to the downside. All right. So that's NASDAQ. We're going to keep it moving and check out crude oil. Now this you can see in the last two candles, there's been some strong selling pressure. Lots of profit taking. So I'm wondering if there's going to be more profit taking. As of right now, I have that 65 Fibonacci level that I'm looking at. We actually lost this level yesterday as a support. You can see on the daily chart candle, it actually closed below it. That's usually bearish. However, we are now gapped up a little bit on today's candle, and it's just consolidating just above that support level. But the day is still young and there's still about 10 hours left on this candle. There's a lot of stuff that can happen. We need to be ready. Overall, bears must break back below 65. If they can do that, then yesterday's breakdown stays intact. That means the price action stays bearish, and the next target I have to the downside is at 63, 61, and 59. Definitely possible to hit, but the bears' first mission today or this morning is to get price back below 65. Because if price stays above 65 as what it's trying to do now, then yesterday's breakout gets invalidated. If yesterday's breakout gets invalidated, then I can only assume the opposite, because yesterday's breakdown means that it's bearish. So if that breakdown, that bearish breakdown, gets invalidated and it recaptures, that's a false breakdown, and usually that would be bullish. So if price can stay above 65, I do have resistance at 66.5 and 68. If those levels clear, I would trust the bounce from 65 more, but only if 66.5 and 68 clears. Because to me, bouncing off of 65 and recapturing those levels would showcase strength. It'll showcase strength and interest that there is buying pressure. So let's move on to the last ticker symbol. I've been meaning to cover this for a while, but I kept forgetting. But I remember today, and as you can see, gold has been looking a bit bearish lately. We had this uptrend line, and then we had the bearish breakaway gap. This is a bearish breakaway gap. Instead of giving us that traditional breakdown of a support level, it gapped below it and then continued to show selling pressure, pushing down lower. So it is looking bearish. Started off with a bearish breakaway gap, broke down one of my Fibonacci levels. This was at 97,556. It broke it down Monday. And yesterday and this morning is back testing it as a resistance. So a support level is turning into a resistance. That's usually bearish price action. A buy zone now switching roles and turn into a sell zone. That's bearish behavior. So based on that context, if the price can stay below 97,556, that would overall say to me, hey, we are bearish and you can expect more downside. The next target I have to the downside is at 96,142. That can definitely hit if the bears can keep price below 97,556. And if 96,142 fails, I have 95,148 and 94,155 below. Now, how would this get invalidated? Once again, to invalidate this breakdown and this back test, the bulls would need to recapture this level. It needs to recapture the lost level, turn it into a false breakdown. And if they can do it and get price back above 97,556, I will feel a little bit more confident that we can go fill this gap and go hit the 99,358 level. And above 99,358, I would assume this low right here that we have would be a higher low that can lead to higher highs. So thank you so much for listening to me. I really appreciate your time. This really means the world to me. And I hope I was able to help you, and I hope you was able to learn something and level up. And don't forget, you are a money magnet. Peace.